Most traders look at a chart and see price, where it went, how fast it moved, which candles were green, and which were red. But there is an entire dimension of market information that price alone cannot show you. Not where price went, where it spent time. And where it spent the most time is where the most trading happened. Where the most trading happened is where the most orders are sitting, and where the most orders are sitting is where price is most likely to react in the future. That is volume profile. And in this video, I am going to show you exactly how to read it and how to use it alongside price movement to make better trading decisions. Not financial advice, just education. Let's get into it. First, let's understand what volume profile actually is and why it is fundamentally different from the volume bars you already know. Standard volume bars sit at the bottom of your chart. They tell you how much was traded in a specific time period. High volume bar means a lot happened in that candle. Low volume bar means not much happened. That is time-based volume. Volume profile is different. It is price-based volume. Instead of asking how much was traded in this hour, it asks how much was traded at this price level. The result is a horizontal bar chart drawn on the side of your price chart, showing you the distribution of all trading activity across every price level in a given range. Some price levels have enormous horizontal bars, meaning enormous amounts of trading happened there. Other price levels have tiny bars, meaning almost nothing traded there. That distribution tells you something time-based volume never can. Which price levels the market considers important, and which ones it passed through so fast it barely registered. Here is the one idea that changes everything. Price moves fastest through the levels where the least volume traded. Price moves slowest, and reverses most often at the levels where the most volume traded. Once you understand that, volume profile stops being an indicator and becomes a map of where price is going to react before it gets there. Now let's go through the 4 key components of volume profile that every trader needs to understand. Component 1. The point of control. The point of control, or POC, is the single price level where the most volume traded across the entire profile. It is the longest horizontal bar on the volume profile. The POC is the most important level on the entire profile because it represents the price that the market spent the most time at and where the most transactions occurred. What does this mean practically? The POC acts like a magnet. Price tends to return to the POC after moving away from it because there are more resting orders clustered at that level than anywhere else. When price is above the POC acts as support. When price is below the POC acts as resistance. And when price reaches the POC, it often consolidates there, spending time as the existing orders get worked through. Mark the POC on your chart before you do anything else. It is the gravitational center of all the trading activity in the profile. Component 2. The value area. The value area is the price range where approximately 70% of all volume traded. It has 2 boundaries, the value area high, which is the upper boundary, and the value area low, which is the lower boundary. Think of the value area as the market's comfort zone. This is the range where most participants agreed on price and most transactions occurred. Price inside the value area is in accepted territory. Price outside the value area is in rejected territory. And this distinction matters enormously for trading. When price breaks above the value area high and stays above it, that breakout has a higher probability of continuation because price is moving into territory the market previously rejected. When price breaks below the value area low and stays below it, same logic applies in the opposite direction. But when price moves outside the value area and then pulls back inside within a short time, that is a failed breakout. The market tested rejected territory, found no acceptance, and returned to the comfort zone. That failure to accept is often a powerful reversal signal. Component 3. High volume nodes. High volume nodes, or HVNs, are price levels with significantly above average volume. They appear as wide sections on the horizontal bar chart. HVNs represent areas of price acceptance, places where buyers and sellers reached agreement and traded heavily. HVNs are natural support and resistance zones, but they work differently from traditional support and resistance. When price approaches an HVN from above, it tends to slow down and consolidate rather than reverse sharply. Because there are so many orders at that level that price gets absorbed gradually rather than rejected immediately. When price is inside an HVN, expect choppy, difficult trading conditions. The volume at HVNs creates friction that makes directional movement harder to sustain. This is critical information before you enter a trade. If your target sits inside a major HVN, expect the trade to slow down and potentially stall before reaching your exit. Component 4. Low volume nodes. Low volume nodes, or LVNs, are price levels with significantly below average volume. They appear as narrow, thin sections on the horizontal bar chart. LVNs represent areas of price rejection. The market passed through these levels so quickly that almost nothing traded there. And because almost nothing traded there, there are almost no resting orders at those prices. LVNs are where price moves fastest. They are the gaps in market acceptance. When price enters an LVN, it tends to move quickly and aggressively toward the next HVN or the next major support and resistance level. This is the most powerful trading insight volume profile provides. If you can identify an LVN between current price and your target, that gap in volume means price has almost no resistance between here and there. That dramatically improves the probability that price reaches your target without significant interference. Now let's talk about how volume profile and price movement work together in practice. Because volume profile without price context is incomplete, and price movement without volume profile is missing a critical dimension. How to use them together. 3 practical applications. Application 1. Identifying high probability support and resistance. Traditional support and resistance is drawn based on where price turned before. Volume profile tells you why it turned there. When a traditional support level aligns with a high volume node or the point of control from a previous session, that level has double confirmation. Price turned there because there was enormous order activity there. That is a fundamentally stronger level than a support line drawn simply because price touched it before. Application 2. Predicting the speed and distance of a move. Before entering any trade, look at what sits between your entry and your target on the volume profile. If the path to your target passes through a major HVN, expect a slow, choppy move that may stall. If the path to your target passes through a series of LVNs, expect a fast, impulsive move with minimal resistance. This information should directly affect your position sizing and your patience after entry. A trade through an LVN into empty volume territory deserves confidence. A trade pushing through multiple HVNs deserves caution and tighter management. Application 3. Confirming breakouts as real or false. This is where volume profile provides its most valuable service. When price breaks above a key level, look at where the breakout is heading on the volume profile. If it is breaking into an LVN, the breakout has a structural tailwind. The thin volume above means price can move quickly, and there is nothing in the way. Real breakouts tend to happen into LVNs. If price breaks above a level but immediately enters a major HVN above it, be skeptical. That high volume above is going to create friction, slow the move, and potentially push price back below the breakout level. False breakouts frequently occur when price breaks into a large HVN it cannot absorb, stalls, and reverses back below the key level. Volume profile tells you in advance whether the breakout is entering open air or a wall of resting orders. Here is a complete framework for incorporating volume profile into your existing analysis. Before every trade, run through 4 questions. Where is the POC relative to my entry? If price is approaching the POC from below, expect resistance there. If it has already cleared the POC becomes support. What is the value area? Is current price inside or outside the value area? A move outside the value area that fails to accept is a reversal signal. A move outside the value area that holds is a continuation signal. What sits between my entry and my target on the volume profile? LVNs mean speed. HVNs mean friction. Know which one your trade is walking into before you enter. Has price accepted or rejected the current level? Acceptance means price is spending time at a level on expanding volume. Rejection means price touched a level briefly and left quickly on low volume. Acceptance and rejection are the foundation of every volume profile decision. Here is the mindset shift that makes volume profile genuinely useful rather than just another line on your chart. Stop thinking about price levels as lines where price bounced. Start thinking about them as locations in the volume distribution. The question is not, did price bounce here before? The question is, how much volume traded here? A level with enormous volume behind it is a level with enormous order activity behind it. That order activity does not disappear. It sits there, resting, waiting for price to return. When price returns, those orders create the reaction you are trying to trade. Volume profile shows you where those orders are. Price movement shows you when price is approaching them and how it is reacting. Together, they give you a complete picture that neither provides alone. Drop a comment. Have you used volume profile before, and if so, what was the most confusing part of reading it? I read every single one. I'll see you in the next video. Stay disciplined.